4 Price Action Secrets, the ultimate guide to price action. Have you ever wondered how some traders effortlessly predict market movements? Today, we reveal 4 price action secrets that will make you a master of the charts. Are you ready to step into the battlefield armed with knowledge and strategy? Get ready for trading triumphs, heart-stopping breakouts, and the thrill of outsmarting the market. Welcome to the ultimate guide to price action trading, a journey that will transform your understanding and empower your decisions. Price action trading is a skill that separates successful traders from the rest. It's a powerful technique that allows traders to understand market dynamics and make informed decisions based on actual price movement rather than relying solely on indicators or complex algorithms. In this ultimate guide to price action, we will unveil 4 price action secrets that help you unlock the true potential of your trading strategy. Get ready to take your trading game to the next level. Secret number 1, the art of reading candlestick patterns. Candlestick patterns have been used for centuries to analyze price action. These patterns are formed by the open, high, low, and close prices of an asset within a specific time period. They provide valuable insights into market sentiment and can help predict future price movements. Understanding the anatomy of a candlestick and recognizing key patterns such as doji, engulfing, hammer, and shooting star can give you a significant edge in your trading. For example, a doji pattern may indicate indecision and potential reversal when it appears at a key support or resistance level. Similarly, an engulfing pattern, where one candle completely engulfs the previous one, often signifies a reversal in the prevailing trend. But it's not just about memorizing patterns, it's about interpreting them in the context of the market. Learning to read these patterns and combining them with other technical analysis tools such as trend lines and indicators can enhance your trading strategy and increase your profitability. Secret number 2, the power of trend analysis. The trend is your friend, as the saying goes, and understanding the power of trend analysis is essential for any trader. Trend analysis involves identifying the direction and strength of price movement over time. There are 3 types of trends: uptrend, downtrend, and sideways. An uptrend is characterized by higher highs and higher lows, while a downtrend is characterized by lower highs and lower lows. Sideways or ranging markets occur when price consolidates within a specific range. Various technical tools such as moving averages, trend lines, and price channels can help you identify the trend's direction and potential reversal points. When the price is in an uptrend, you look for buying opportunities, and in a downtrend, you seek selling opportunities. However, it's essential to remember that trends can change, and regular analysis is crucial. By trading in alignment with the prevailing trend, you increase your odds of success. Trend analysis can also help you filter out the noise and avoid trading against the dominant market direction. However, it's important to confirm trend signals with other price action factors to minimize false signals. Attention trading aficionados and price action enthusiasts. Are you hungry for more price action wisdom? Ready to take your trading skills to the next level? Well, you're in luck, because we've got something extraordinary in store for you. Calling all trading enthusiasts and price action lovers. Subscribe to our channel and show your support by hitting that like button. We want to hear from you too. Comment and let us know your thoughts, questions, or trading experiences. Secret number 3, support and resistance zones. Imagine the price chart as a battlefield, with buyers and sellers fiercely competing for dominance. At certain levels, the battle intensifies, resulting in significant price reactions that form the foundation of support and resistance zones. Support and resistance zones are like the front lines of this battlefield, marking crucial areas where the forces of demand and supply collide. When the price approaches these zones, it's akin to the clash of swords between bulls and bears, determining the market's direction for the next move. Understanding the zones. Support zones are akin to a sturdy fortress built by buyers who believe the asset's value is justified at a particular price level. As the price descends and touches this level, buyers rush in, forming a barrier that halts further declines. On the other hand, resistance zones are like an impenetrable castle erected by sellers who see the asset as overvalued. When the price approaches this stronghold, sellers push back, preventing further upward movement. Identifying these zones on the price chart is an art that seasoned traders have mastered. Like an ancient map with hidden treasure, traders use various techniques to locate these critical levels. They scour historical price data, drawing lines connecting previous lows for support and previous highs for resistance. Additionally, they use moving averages, trend lines, and even psychological price levels to pinpoint potential zones. Trading the battles. Trading within these zones can be exhilarating, as it offers high reward opportunities for those brave enough to seize them. When the price reaches a support zone, traders watch closely for signs of the bulls gathering strength. Will they stage a successful defense and push the price higher, or will the bears overpower them, breaching the fortress? In such moments, the market becomes a theater of drama and suspense. Candlestick patterns take center stage, signaling potential reversals. For instance, a hammer candlestick resembling a mighty warhammer could indicate that the bulls have gained the upper hand, while a bearish engulfing pattern could suggest a breach of support by the bears. Conversely, when the price approaches a resistance zone, the excitement is no less palpable. The bears are determined to defend their stronghold, but will the bulls gather enough momentum to storm the castle gates? As traders observe the candlesticks closely, the battle plays out before their eyes. The breakout, a triumph or a trap? Sometimes the price breaks through these zones, creating a thrilling breakout. It's like a thunderous charge of cavalry, shattering the front lines and opening new trading opportunities. But beware, not all breakouts are genuine triumphs. False breakouts are akin to cunning ambushes designed to lure unsuspecting traders into a trap. Price briefly breaches the support or resistance zone only to quickly retreat, leaving those who took the bait with losses and dashed hopes. To differentiate genuine breakouts from false ones, traders rely on additional confirmation signals. They might look for increased trading volume, strong momentum, or additional price action patterns to validate the breakout. The dance of price reversals. One of the most exhilarating moments in price action trading is witnessing the price reversals at these critical zones. It's like a dramatic ballet where the lead dancer gracefully changes direction, captivating the audience. When the price reverses at a support or resistance zone, it can lead to significant market movements. Traders who successfully catch these reversals are rewarded handsomely. However, the key to success lies in patience and not rushing to predict a reversal too early. Waiting for confirmation through candlestick patterns or other indicators can prevent premature entries and potential losses. Secret number 4. Mastering risk management and patience. Successful trading is not just about finding winning trades, but also about effectively managing risk. Price action trading requires discipline and patience. Mastering these qualities can significantly affect your trading results. Risk management involves setting appropriate stop-loss orders, sizing based on risk tolerance, and maintaining a favorable risk-to-reward ratio. By determining your risk tolerance and using position sizing techniques, you can ensure that each trade aligns with your overall risk management strategy. Patience is necessary to wait for high-probability setups to avoid impulsive trades driven by emotions. Price action traders often look for confirmation signals and wait for prices to reach specific levels before entering a trade. This approach helps to filter out false signals and reduce the chances of entering trades with unfavorable risk-reward ratios. Price action trading is a skill that requires dedication, patience, and continuous learning. By incorporating the 4 price action secrets revealed in this ultimate guide, you can elevate your trading to new heights. Remember to study and practice each secret as well as integrate them into your trading plan. With time, patience, and a solid understanding of price action, you can become a proficient trader and unlock the potential for consistent profitability in the markets. So grab your charts, keep learning, and embark on your journey to becoming a master of price action. As our incredible journey into the world of price action trading ends, don't miss out. Check out more videos on our channel and delve deeper into the world of price action trading. To stay connected and continue your growth as a trader, make sure to subscribe to our channel. Share your thoughts, experiences, and ideas in the comments section below. Let's keep the conversation alive and build a community of passionate traders who inspire and uplift one another. Remember, subscribe, like, and comment to stay connected, motivated, and on top of your trading game. Until next time.